If I'm going for 1:2, it was successful 60 times, right? If I'm going for 1:3, it was successful maybe 40 times. You see it? Yes. So that's what we use when we get there. Okay, so probability is the life wire of everything we do. And really, if you can get your head around probability in trading, you will not have any difficulties making money from the market. A lot of people accept probability, but they agree, but they do not accept. A lot of people agree that yes, it's a probabilistic market, but they do not accept it. And these people, you see, that's why I said the way I approach my own is different, because I need you to understand some of these things before we start to trade. If you understand that the right thing is TA, is fundamental analysis, you understand what drives the market, and then you understand that we just put TA together from statistical data or from chart representation does not guarantee it to work. Don't get it wrong. The TA I'm going to give you is very, very effective, but doesn't guarantee that. If you have a TA, it means that look at the guys that, okay, I'll take you to the point where you see the guys that started this thing. Charles Dow. They just studied the chart. And then they decided to see that, okay, there is a pattern. They just said, okay, there is a pattern. Okay, since market is going like this, I think there is a regular pattern. Ralph Elliott also said that, okay, yes, it moves in a wave of 5. These people, and these things were as recent as the 1990s. Up until Forex, we couldn't trade Forex as at 1980. We can't trade Forex the way we trade now. It's from 1992 that brokers started coming in. And then we're able to trade it. So technical analysis is a fresh thing. In the future, there might be something else. But right now, what we have is TA. And TA is not the reason for market movement. Is not the reason for market movement. Okay, so that's why we say you got to, any trade, if I have a 60% win rate, right, and I'm taking my 25 sample trades, right? Now on all of these trades, I'm opening them. I don't care about what happens. I don't care about the outcome. I don't care what happens. But I only know that, okay, I have 10,000 naira in my trading account, and I'm going to use 200 naira on each trade. 200 naira on each trade. 200 naira on each trade. Now, I do this, and I say, okay, let me do this 30 times or thereabout. Now, accepting probability is the part that you look at this trade as a collective trade. This is the right thing to do if you are doing TA. This is the right thing to do. If you're looking to flip money, quickly and make some profit by the end of the month, this is the only way that we have established that it can be done consistently. If you risk 2,000 on this single trade here, and you are right, you make 4,000, right? But if you are wrong, you know what will happen? You lose 2,000. If you spread out that 2,000, right, across, you know what will happen? No. If you spread out 2,000, no, I'm not saying 2,000 now. I'm saying break it down to 10 trades. Do you know that you can never lose that 2,000? If you have a 60% win rate, you're going to have, this one will work, this one might not work, right? This one will work, This one will work, this one will work, this one won't work, right? This one won't work. You don't know which ones will work and which ones will not work. Is it not? So if you're doing TA, it's a probabilistic game. We are speculators, are you aware? Yeah. Do you know what a speculator is? I showed you the financial market, the 3 types of financial market. And then we got to the currency market, where we now saw spot, and then we saw futures. Everybody on futures is a speculator. A speculator is anybody that puts a risk in order to make profit. You risk a little in order to make profit. You're a speculator. Speculators, everything proprietary trading firm is a speculator. Intraday traders are speculators. Hedge funds are speculators. All these people are speculators. Right? So if you are a speculator, you are saying that I want to risk a little amount to make money. Now, if you spread 200 across, this number of trades, you have 200 into 10 trades. 200 naira into 10 trades. Look at your first 10 trades. This is what your first 10 trades would have been. Okay, so here you have heads. Heads is win, right? Tail is lose. So here you have heads. You are up 400, right? Here you are down 200, right? Here you are up 400. Here you are up again 400. You're up again 400. You're down 200. You're down 200. You're up 400. You're up here 400 and down here 200. This is what 2,000 naira will give you, right? If it's complete. Okay, it is. Right? This is what at the end of the day you make money, right? Yeah. You make money. If you say it is a 60% win rate, that's what we have here. We have 4 losses, right? And 6 wins. Okay, so what you have here is what will happen to your 2,000 naira. Now, but if you carry your 2,000 naira and put it on one trade, if you lose your 2,000 naira, before you get to this point, you might not have enough 2,000 naira, or your account will not be looking too good anymore, and then emotion starts to kick in. The only way to avoid emotional trading in the first place is to do this thing. If you see people that are dealing with emotional problem, they are risking too much on each trade. Because if you open a trade and you are not risking too much on that particular trade, you don't have anything to, make you put it off immediately. You allow it. So professional traders think of trade as a collective trade, not as a single trade. That thing is very important.
If we were doing this thing like on a real account, you said we should not risk more than 6% on an open trade.
No. This is just like 1 trade, 2 trade, 3 trade, 4 trade, 5. I'm not saying that you should now put the 2,000 at once. Yes. So you can take your first 3 trades. Hold on. If you have another, of course, if you have another opportunity you think is better, you have to close one of these trades. And the reason is clear. We're going to get to it. It's still part of this, right? So it's very important to. I don't think there's any other way to make you understand probability apart from telling you that really there are people we call dynamic traders. Are you aware? This thing you are hearing about market makers is real. Do you know that? Do you know that there's market maker? Yeah. There's market maker. A lot of people claim that they know how to trade. It's not true. You don't even need to know it. But there are a group of people that are market makers. We call them dynamic traders. There are people that will push the price with volume. They are there. They are part of the speculators. They are a group of speculators. There are about 6 groups or 6 people in that group. Individual traders. Yeah, individual traders are there. Hedge fund. proprietary trading firms like Goldman Sachs and JP Morgan and the rest of them. What do you have? Investment banks, market makers, and then there's one more group, right? So all these people are part of this thing. All right, so let's go on because we have a lot of slides to look at. So again, another reason, if you're not comfortable with the idea of probability, right? If there's any other thing that should warrant you to risk just a little, is the fact that every trading system have clusters. There's always a losing streak, and there's always a winning streak. And then the way we design our trading system is when you see what we have here. What we have here is what are your chances? Is almost 100%, right? Very high. What's the chances of having even as much as 10 on a 5% system? It's very high, right? You can have, if you have a 5% system, yeah, you can have 10 losses in a row if the system is bad, is it not? You can have 10 losses in a row. That's what that thing is saying. And then, of course, as you start to improve the system, if you're taking a reversal trade, which is a 40% trade, 40% chance that you will succeed. Your success rate, your streak of losses can be as much as 5. Do you understand? If you take a reversal here, 1, take the next one, trade distribution, you will find as much as 5 clustered together. Do you understand? For a 40% system. Now, it means that you have to, now I want you to understand some of all these things we say, use 2%, use 6% open risk. This is where they are coming from. If you have a 40% system, you cannot have easily as much as 6 losses in a row. But you can have 5. Right? If you can have 5 losses in a row, it means that whatever you are risking on each of these trades, when those 5 losses in a row comes, when you add all of them together, it should not be detrimental. That's where open risk comes into play. Do you understand what I just said? Now let's say you have, that week is the week where the 5 losses in a row will come out. You're taking 5 reversal trades, 5 losses in a row. You have 1. Don't think that reversal trades are bad. They have good reward. I hope you know. When you have a reversal trade, you try to catch the beginning of a trend. You can trail it for many weeks. Do you understand what I just said? So it can fetch you a lot of money. So I'm not saying they are bad. So but we have seen that there is a chance of you having as much as 5 losses in a row. What we are saying is, how do you protect yourself when you experience 5 losses in a row? I don't use more than 1% on each trade. I don't. As a matter of fact, if you're going to do intraday trading, you can't use more than 1%. That's the rule. Why we say 2% is for swing traders. Can't use more than 1% on each trade. You're not running to anywhere. You take a trade, you can't use more than, because if you have these losses in a row, you're going to lose 5% and not 10%. Do you understand? You're going to lose 5% and not 10%. Some of you here will trade with prop firms. When you start to trade with prop firms, you will now see that you will even find it difficult to use 1%. Because the problem is, when you are thinking from the amateur angle of not having enough capital, if I tell you to use 1%, it's crazy, is it not? Yeah. Because you are looking at $100, and you're looking at 1% of $100, $1, and then you make money. How many times? You're making $8 after all your stress, all your data, all your analysis. So it doesn't work. But when you think of money, $100,000 is around 40-something million naira. 1% of that money is a lot. I hope you know. 400 and something thousand. So to even use 400 and something thousand on one trade, you find it difficult. So when we say 1%, it's not small. It's not small. I know what I'm saying. It's not small. I use 0.5. I've just, moved to 0.75. I started my week with 0.5. That's how I start. You have to buffer. If your target is to begin at the beginning of the month, start trading, and then towards the end of the month, you make some money. When you start from 0.5. You start from 0.5, you have some buffer. You have like around, let's say, 2-3% profit on the account. Then now, if you risk 1% per trade, you are not even risking your capital anymore. And then as you go, you open up. As you go, you open up. You're not risking your money anymore. It's very important. Okay, so clusters are there. That's the point we're trying to make. And they will reduce. They will reduce that system is, below par. It doesn't lie. You see it. Okay, so this means that if we have said that a 40% system cannot give us anything more than 5 losses in a row. If you have a system you design and think is 40% and you have 8 losses in a row, it means that thing is below 40%. It's not actually 40%. Do you understand what I just said? That's what it means. Because you're not supposed to have that number of losses at once. Okay, so that most traders have. And it is the genesis of every emotional trauma. If you are trading for a prop firm and you suffer a drawdown, that is where your brain will stop thinking like a trader. Right? So drawdown is key. You have to protect your money. Why do I start the month with little money? Because I don't want a drawdown. I don't want a drawdown. If you start and then you open up 2% of your actual capital and you have 2 losses, 3 losses in a row, you are down 6%. Is it not? Yes. You are down 6%. That's a drawdown. That's what it is. So when you start small. I don't want a drawdown for any reason. If the 0.5 I'm using to start my trades with are not giving me good trades, I will stay there until it starts to give me good trade. Unless I've established my buffer, I won't add. Because that's the opposite of what most people do. When they bet and they lose, they bet and you will not see the person that is, when you are doing a normal betting, the person who is winning will hardly say let's increase. Is it not? If we are betting 1,000 naira, the person who is winning will hardly say let us increase it. Go to the back there where they play snooker. If they put 1,000 naira and then they start playing, the person that is losing the 1,000 naira is the person that will say let's change it to 5,000. Is it not? Yes. All of those things are normal human psychology, and that's why you have to work against all of that. And you have to put in a conscious, you have to first know that they exist. Then you put in a conscious effort to eliminate it. And if you don't have proper knowledge of most of these things I'm giving to you now, you will not be able to eliminate those problems. When you have a drawdown, that's when you should reduce your lot size. If I have 3 losses in a row, I will reduce my lot size. It's the opposite of what people do. If they have 3 losses in a row, you know what they will do? They will increase their lot size to make up for the losses. It is management that makes us traders, and it is management that gives us money at the end of the month. If you cannot manage yourself and your trade, you cannot make money. Most of those things are easy to agree with, but they are not very easy to accept. It is in accepting. That's why we have to stretch out the course. We say 3 months, because you have to move yourself to the point where some people have to lose and lose and lose until they get to the point where they say, what should I do, or what do I have to do? They would have lost and lost and lost before they now start to, caution themselves. This is a curve that shows, what will happen. It's easy. If you lose as much as 50%, right? 50% of your account size, you need 100% to break even. You need 100% to break even. If you have changed the $100 in your account to $10, that's 90%. You know how many percent profit you need? It's not 90% profit, though. Do you know? You need to double that. You need to make... It's crazy. You can't... If a hedge fund gets a 40% drawdown, they shut down. If a hedge fund gets a 40% drawdown, they shut down. You know why? Hedge fund traders they are stock traders. And in the stock market, they make around 20% max in a year. 20% max in a year. They need to make a profit on... If they have ₦1 million and what they now have is 600,000, they need to make 66.7% of that 600,000 to get back the ₦1 million. And that will take them like 3 years. Yes, that's why they have to shut down and declare bankruptcy. Right? So, as traders, you have to understand that concept. To begin with, 5% is very okay. But you can't even... I don't use up to 5. When you trade for proprietary firm, you see that they tell you daily loss max is 5%. Abi? Your own daily loss max shouldn't even get to 5%. And then I'm going to teach you how to pass those prop firm thing, right? You can't start big. If you start big, you blow the account. And then there's a special money management strategy that you use. You understand the result you can make when you apply. When you start by risking 0.5, you're going to make a certain amount after some group of trades. In fact, FTM will have this algorithm where you will see, you can impute the data and see your result. It's a simulator. It will show you your result, right? The possible outcome, right? Of maybe you say, I have a 60% system and I'm taking this per trade and I'm doing this. It will tell you, okay, this is the amount you would have made by so number of trades. Okay? So you will look at it, then you will see how you can start small and then add up until you will observe that you will never even you will not have a drawdown that exceeds 3%. And once you have your buffer, you're not coming down anymore. Okay, so, I mean, I'm telling you that you shouldn't lose as much as 50% is just stating the obvious, right? you better know that you don't have any business with all of this big percentage. No matter how good you are, because of this cluster thing, this drawdown thing, if you risk as much as, 1/10 of your account, you will get blown out. No matter how good you are, over time, it will affect you. And there are a lot of things that will affect you, which also includes your own self. You become your own enemy. Right? So, you got to be careful. And then I want to believe that you understand this recovery thing. Okay? Because recovery in layman's term is, you have 10,000 naira. And you have 10,000 naira. You started with 10,000 naira. And your money now is 5,000 naira. If your money is now 5,000 naira, if you make, what you lost is 50%, Abi? Yeah. You lost 50%. But do you know that if you make 50% here, you won't get to 10,000 naira back. 7.5. Right? 50% of this, which you have lost, is 7.5. For you to get back 10,000 naira, you need 100%. Is it not? You need to double this money. Okay? So you have to understand that concept. Very important. 10% drawdown, you need around 11%. So
It's achievable, right?
yes, you need around 11%, which is achievable. But
Company then declare bankrupt. Don't they have belief in themselves? That they
well, it's not about believing in yourself. As at that time, most of them they just trade stocks, and when you trade stocks, there's no magic you can do. Right? There's no magic. If you suffer a drawdown or a loss, it's going to take you that number of years. It's just like saying a forex trader suffers a drawdown of 40%. For 4 months or 3 months, he won't have any profit on that account. I don't know if you get what I'm saying now. Because if he's making 20% every month, right? For a stock trader is every year, but for a forex trader is every month. So if he makes 20% in the first month on that balance, which is 60k, 20% of 60k is around 12, Abi? 12,000. It's around 12,000. So by the end of that month, what he will have is 72,000 at the end of the first month. He'll trade again and make 20% of 72k, right? Which is something around 14. So in the second month, he's going to be having around 86, 84, right? 86,000 naira. This 86,000 naira, he will now make another 20%, which will now bring him close to, yes, close to, no, he's going to have something close to 100. Yes, because the actual mass is 66, right? So he will now come to, let's say, 77,000 naira. Then maybe it is now the 4th month when he now makes 20% of this 97,000 naira. He will now come and then stay around 100 and let's say 16,000 naira. So if he has a drawdown of 40%, he needs 4 months to show up with profit. Is understandable, Abi? So that's drawdown to very important concept. So as you continue to go down, you need a higher number. If you lose as much as what we have here is around, let's say, 70%, you need close to 250% to get back your money. All right, of course, because if you have 100 and you reduce it to 30, you need to double it, 100%, double again, right? Almost 300%. So you got to avoid it. And then risks per trade and total open risk shouldn't exceed 2% for swing traders. Because swing trade takes a couple of days, is it not? So you can take 2%. And then swing traders usually they wait for their levels. It takes some time. So they are not just jumping into these trades. They wait for levels. When you get to that level, they like it, they enter. Right? So those are swing traders. Okay? And then if you're a day trader, it's recommended that you don't go beyond 1%. It's recommended that you don't go beyond 1%. If you use 1% and you have just one trade in a day, for 20 trading days, you would have risked as much as 20% of your account, which for me is okay. Maximum trade per day, 3%. Maximum trade. So reduce your risk. The irony of forex trading is that the more you reduce your risk, the higher the money you make. A lot of people don't know. If we do the maths, and I'm risking 1% and you're risking 2%, I will make money more than you at the end of the day. This is still going to depend on win rate though, but I will make money more than you. Or at least, I will not lose money as much as you will lose. See, the only thing we can control is what we lose. You don't have any control over what else there is. The only thing you can control comfortably is how much you are releasing every time. What happens to it in return is not your business. Just make sure that if you have 10,000 naira, you look at it and you must decide before you start to trade. How much are you going to be giving out? That is what makes us traders. So that concept is very important. Very, 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 very important. All right?